Welcome to the Fundamental Lessons. You're about to embark on the most dangerous leg of your entire investing journey right now. Why is it so dangerous, you might ask? We have noticed that most people give up around the fundamental lessons. They believe that this stuff is too simple for them, that they think that they know it all already, that there's nothing here for us to teach them. It's quite the opposite. You're no use to anybody if you make simple mistakes and die in the process. Die, metaphorically speaking, because in the market, most people get absolutely destroyed. We told you when you joined this university that we were going to bring you up into the top 1%. That will be impossible if you make simple mistakes and you blow yourself up, or if you miss some fundamental principles that build off each other as you get more advanced over time, so that when you unlock the most powerful secrets in this university, you won't be able to understand them because you missed some fundamental principle 10, 20, 30, 100 steps behind. So make sure that when you're going through the fundamental lessons, you're paying attention, you're committed, and that you're going to reach the very end of the fundamental lessons. There's no point in taking 2 lessons or 3, you must do them all. Now for the fun part. What are we going to be learning in the fundamental lessons? We're going to be learning how to manage your portfolios at different levels of income and wealth. We're going to be covering how and why you should be following signals. We're going to be covering how to buy and sell. We're going to be telling you what crypto really is, why you should avoid Forex, how to do some basic charting, and some basic philosophical and psychological principles with some extra lessons seasoned in there just to round everything out to make sure you have a comprehensive understanding of where we're coming from, our approach to the market, and all the different tools that we're about to be teaching you. If you're just starting out, you'll probably feel like a lot of this material can be a little bit complex even as a beginner. If you're experienced, you'll probably feel like this stuff is too simple. I cannot stress to you enough. Doesn't matter which category of experience that you're in, it's absolutely critical that you commit and you reach the end of these lessons. If you don't, then what was the point of coming here in the first place? And you never end up reaching the best material that we have. So commit to it, get through it all, and I'll see you in the following lessons. Well, first things first, welcome to the lecture on account size principles. Here we're going to be taking you through an overview of different wealth levels and what you should be doing at different stages of your life, depending on what your current circumstances are. We're going to be just doing a general overview so that you know whether crypto is going to be useful for you, what other things you should be doing, and how to get the most out of your different account sizes. So we're going to be going through a whole bunch of different combinations here, divided up between income and capital size. Capital is another word for savings, so how much money you have in the bank. So we're going to be going through low, medium, and high brackets for each of these. So that's low, medium, and high income, low, medium, and high savings or capital. We're going to be mixing and matching them all together to capture as many different people as possible. So the starting position definitions. These are all general in nature. They're not prescriptive. They're not supposed to label you in any particular way. We're just generalizing so we can put people into approximate cohorts. So I've broken up everybody into different numbers here. We have low income, that's less than $500 US a week. Medium income, which is about $1,000 US a week. High income, which is about $1,500 US a week or greater. Low, medium, and high savings or capital. I would consider somebody in the low savings bracket if they have less than $5,000 US saved. Medium savings, somebody with about $10,000 US. High savings, anybody from about $50,000 to $100,000 US and above. As I go into portfolio risk, that will be a general guideline as well. We'll be talking about the different levels of portfolio risk people can handle at different wealth levels. So before we jump into this, now that you know what different cohorts we're looking at and we're mixing and matching them all together, so we're going to have low income, high savings, high income, low savings, things like this. You can skip to whichever one's most appropriate to you. You'll probably get the most value if you watch the whole presentation. However, if you're short on time, skipping to the one that's most relevant for you is not a problem. Remember, these are general in nature, so they don't take into consideration your specific circumstances. So first category, off the rank, low income, low savings. If you're in this position, life is not too good. You're struggling a little bit. Going off what we have spoken about previously with the nature of crypto, having it as a capital and money multiplication exercise rather than a money addition exercise, you're going to need to increase your income in order for you to participate in crypto. If you don't really have any savings and you don't have any money to invest, then how can you expect to make any money with crypto? 0 multiplied by 100x is still going to be 0. Therefore, your primary goal, the goal above all other goals, is to increase your income so that you can live comfortably and start to accumulate capital for your savings and for your investing portfolio. Pay attention, because this ties back into the principle that crypto is not a magic wand that can solve all of your financial problems. A lot of kids think that they can come into the crypto space with $100, some pocket money, flip a few NFTs and become super rich. It's not the reality of trading. Not if you want to put the probabilities in your favor of absolutely becoming rich. That's not how the professionals do it, and that's not how you're going to do it either. Therefore, my recommendation for the low income, low savings category is to go into one of the other campuses where you can learn some monetizing skills. You need to get yourself a business so that you can get that cash flow incoming, so that you can raise your portfolio up and you can get active in the crypto and investing space. Low income, medium savings. So in this category, still, the low income is going to be a problem. Even though you have some capital, enough so that you can actually get some usefulness out of the cryptocurrency world, it's still going to be a bit of a hard life. If you have low income, you're going to be struggling, you're not going to be able to pay for your bills. So the move here is to still, like the last one, make sure you try and maximize that income. Get that income up, because it's like oxygen to your life. It is lifeblood. You need to raise that up. In the meantime, signal following and investing activities will actually be a reasonable use of your time, because now you actually have some capital to work with. So in this sense, I would recommend you actually get involved with some investing activities. However, I wouldn't make it your primary concern. This way, you would be spending too much time on your asset multiplication activity, your investing, and not enough time on your income generation. This will keep you in a perpetual loop of poverty. So you need to get out of that loop by increasing your income. Within this context, I would probably recommend that your portfolio risk should remain reasonably low while you're in the process of seeking out additional income. Okay, so the low income, high savings category. This is a good position. For you to get involved in investing activities will be a fantastic use of your time, because you have plenty of capital to use. This is actually where I started my journey out when I was going through university. I had a part-time job at a very low income, but I had a lot of money saved from my previous career. So what I did is I spent a lot of time looking into investing activities. And this will be a good use of your time as well. Still, my life wasn't that fantastic, and yours may not be either. If you have a low income, you still will not be able to pay for many things in your life without the stress of drawing down from your savings and your capital. So what you need to be doing is looking at ways to increase your income. If you have the capacity, if you have the time, the intellect, and the ability, you need to be looking into finding either a way to maximize your existing cash flow source, or get yourself a business on the side so that you can raise that income up. Because it doesn't matter how many multiples you make on your investing portfolio, if your income is too low, you're going to be in a perpetual state of misery. Signal follow? Understand the fundamentals of investing. Do the best that you can with the time that you have available to you. Perhaps slightly more effort on the investing dimension than the medium savings dimension, but also very, very hard focus on increasing your income up. Portfolio risk in this category, because you are putting in slightly more time into understanding why investing does what it does. This will be more low to medium risk in your portfolio. But yes, practically speaking, signal following and understanding the basics of investing will be useful to you in this category. Medium income and low savings. In this one, ironically, even though you already have a medium income, if you are struggling and you have issues with your expenses, there's two things that I want you to look at. It's expenses number one. See if you can make some sacrifices to bring that capital level up so that you can do some more saving, but also maximize your income as well. We want to make you as much money as possible, but still, we're not going to be able to do that unless you have high amount of capital or savings. So in order to increase your savings as fast as possible, you're going to need more money in, which means maximizing your income. Now, you don't have any money in the savings or capital, so you're not going to be doing a whole lot of anything really. I would suggest not looking at the education I'd be suggesting looking at more cash flow. That's going to be the best use of your time. Income first, collect that money, save it up, get something to invest with. Medium income, medium savings. Congratulations, you're actually in a decent position here. You're probably above average from most people on Earth. I know from experience that middle-class people do not feel this way. However, you're actually in a pretty good position. You're comfortable and you're living an okay life. However, you can always do better. So what we have here is a little bit of money so that you can start to invest, but you also have a comfortable income. Now, you want to be attacking everything at once here. This is a great position where you can really focus in on your strengths as an individual and understand what's useful for you. So if you have a predisposition to maybe working or business, go down the income path. Raise your income into the high income category so that you can turbocharge your savings. Or if you're more intellectually inclined towards finance, then you can go down the investing route and make a good go of investing as well. So it's really up to you. In this stage, you can take on a medium amount of risk in your portfolio, and really any part of any education will be fantastic for you. Medium income and high savings. If you're in this category, you're in actually an excellent position where investing research, managing your assets is going to be a very important part of your life. It's going to be absolutely critical, as a matter of fact, because you've likely spent a lot of time and a lot of effort accumulating this money. It's going to be extremely valuable for you to learn professional skills on how to manage this. All of the skills and tactics we teach you are going to be extremely useful, so I would recommend very hard focusing on the investing dimension rather than the income dimension for the moment. There's a lot to learn, and you'll probably get outsized effects from prioritizing your investing knowledge over your income knowledge. With that being said, from personal experience, I can say that increasing your income levels will always lead to a more enjoyable, more relaxing lifestyle over your capital accounts, because it's like oxygen to your life. It's like blood flow. You can't have a good life without something that's flowing freely, and cash flow does that for you. However, my strongest recommendation in this current bracket is definitely to focus on your investing skills first. That will get you the biggest bang for your buck. It's worth noting that within this category, I wouldn't recommend going too high with risk. You can sustain a bit of portfolio volatility thanks to your above average income. However, we still want to aim for a low to medium risk profile here. So, the high income, low savings category. If you are in this category, there is something seriously wrong with the way that you have organized your life, and there's something seriously wrong with your finances. Perhaps you are keeping up with the Joneses. Perhaps you have a lot of dependents in your family and you are finding it very difficult to save money. I would suggest that you have a very serious look at your expenses and the expenses in your life and ask yourself why your accounts are looking like this. Perhaps you've cornered yourself into a lifestyle where you need to maintain a certain appearance to please somebody. That's the normal one that I find the problem with most people in this category. My best suggestion to you would be to not focus on income, not to focus on investing, focus on your personal finance. If you're looking at investing and you're looking at trading while you're in this certain category, you can actually sustain an enormous level of risk in your investing portfolio. So we're talking very, very high levels of risk here because your capital account is small relative to your income. You could blow up your account every week and it wouldn't even make a difference to you. That's not to say I'm recommending gambling. This is increasing the beta. You will not understand these terms until you go through the entire fundamental lessons and then go into the investing lessons afterwards. But we can show you how to take on a lot of risk intelligently to maximize the gains in your portfolio. If you have small portfolio sizes, we'll reach that eventually. High income, medium savings. This is a fantastic position to be in. Congratulations to you. If you're in this position, it's more than likely you already have your personal finances sorted out and you're well on your way to collecting a massive capital account. So if you're in this category, you need to start looking into your investing skills very seriously because it's in all likelihood your capital account is going to grow quickly with your success in life and it will become a very important life skill to have. So my recommendation would be to, wherever possible, maximize your knowledge in investing, go forward and learn as much as you possibly can because it's likely that you already know what you're doing with your income. We're probably talking somewhere around medium risk because, again, with a high income, you can sustain slightly more portfolio volatility without the psychological effect compared to most people. Okay, and now we reach the very end. High income, high savings. Congratulations, my friend. You are in the top 1%. But it's not good enough, not by our standards. It's interesting because if you're in this category and you're listening to me right now, it's likely that you already know quite a lot about investing and income, or perhaps you're just very, very good at business and you're very good at one particular thing. So what we'll do is we'll get straight to the juicy bits for you here. And anybody that's stuck around watching this video up until this point, congratulations, you'll get to the juicy bits as well. There are 3 standard approaches that I recommend for individuals who are very wealthy and who are very time constrained. It's obvious that if you are in the high capital account category, even if you're in the high income category, that investing is going to be incredibly important to your wealth creation journey. It's going to take you into the next echelon of wealth, through the gentry and into the elite. What we recommend is taking one of 3 different approaches. If you are a long-term investor and you do not have a whole lot of time to manage your personal portfolio, then long-term investing using a strategic dollar cost averaging approach is recommended. We'll be covering that in the investing lessons. The advantages of this is that it's guaranteed to work over a very long period of time. It's very low time input. However, the disadvantages is that it also takes a very long time to develop. If this type of approach is conducive to you and your style, very well. However, there are faster methods, which leads us to option number 2. Option number 2 is developing your own strategic swing trading portfolio management system, which is what I specialize in. My investment masterclass specializes in teaching you precisely how to do this. The gains are far beyond any buy and hold gains that you could ever imagine. The risk is massively reduced. However, the problem is that it takes a lot of education up front. So if you're time constrained as a wealthy individual, you may not have the time to learn these systems for yourself. I would highly recommend you going through the education anyway, because a solid understanding of the techniques and the academic principles and the strategies behind why the systems work the way that they do and how they generate as much profit as they do with the margin of safety that they do, it's so incredibly important to understand these things so that you're psychologically prepared for following the systems if you need to. Now, this leads us to point number 3. If you do not have the time to develop a system as such, and you have a genuine non-interest in learning how to invest at all, that's okay as well. We can facilitate that with you following the signals. A lot of logical people say to themselves, if Adam's already gone and done the research, then why would I need to develop my own system? Surely I could never create a system as good as his. And for the majority of people, that's true. However, depending on the type of individual you are, if you are enterprising, if you are hardworking, if you're intellectual, if you have previous experience in this field and you're looking for the secret sauce, if you're looking for the magic trick, I got what you need. If you do not understand the way that the systems work, you may not have the psychological stability, the intellectual stability in order to signal follow my techniques and follow them to the absolute precision that they require for you to receive the same results that I do. You have the option of simply following along with my trades, and that's okay. Because ultimately, choice number 3 is choice number 2, just without the work. And that's all 3 options that we have there for you. So it's long-term investing, it's medium-term investing, or it's signal following. What you choose will probably be a very personal decision. So in conclusion, you can see that each different cohort that you fall into will come with lots of different considerations. If you have a low amount of income or high amounts of income, that will determine how hard you should focus on income. If you have a high amount of capital or a low amount of capital, that will determine how hard you need to focus on the actual investing activity. As a general rule, if your income falls, so should your portfolio risk, because the income offsets the account volatility, depending on how big the account size is as well. So thank you very much, guys, for listening to this. I'll see you in the next video.